Greetings all, Benny from East West. I haven't looked at anything uranium for a long time for varying reasons, but I thought I might just run the rule over it just for a bit of fun, a bit of a kick, and going along over my old charts. Looks like things panned out more or less how I was thinking. So I'll just break it down here. The first thing I sort of see in this chart is probably this large gap that we had here, and that's kind of filled in now. Well, not kind of, it has filled in now. So what was kind of interesting about this is that we had this really good, the first point where the market sort of, well, not the first point, but a decent point where the market stalled out was right at the bottom of this gap. That's not 100% precise, but you get the general picture that, it's often said that the markets don't like leaving gaps in charts. Well, that was a huge gap, and that has now been filled in. So the other thing I was doing, and nothing's really changed, is looking at this large sort of weekly chart. When we just look at the retracement levels, we just teased through that 61.8. But to me, this sort of point here around the 78.6 is still looks like, the ultimate, or not the ultimate, but a target that the market could extend to. It's got a fair way to go yet. But obviously the sign's pretty good for the moment. So going back to my last video, I sort of was pointing out, and nothing's really changed my mind when I'm looking at this structure in the past, this one here, and I was under the impression that we were going to get some sort of repeat of the 3-wave pattern. Obviously, it's not a carbon copy, and I was expecting that maybe we were going to get another little leg down, but we didn't, and we've sort of broken out of that contracting pattern that had been pointed to ad nauseum for quite some time, that we were just sort of waiting for it to resolve, and obviously now it has resolved. But the premise being that I'm still the same way that this was kind of, it was a little bit more than a one-to-one move. I'm kind of expecting, even though this is quite messy, I'm kind of expecting a similar sort of thing. I don't know if we're going to get, I should probably just go off there. I don't know if we're going to get as high as $47, but the whole thing still remains. This gap's filled in, but with those retracement points and this sort of area of resistance, like these tops that we reached. The general idea is that I think the market is starting to now reach up into the zones where, if I was holding, I'd be starting to think about, do I want to trim, or this is just me, like you've got to do whatever you want, but do I trim, do I tighten stops, do I take it all off? I mean, that's just something for you to decide, but just from a pure technical perspective, it just looks like it's starting to get right into that area where over the next few months you might have to think about that. So nothing's really changed my mind so much in an Elliott perspective. The only thing, I think the last time I was looking at this move down, I thought maybe it had just come down a little bit further, but it didn't, and we know that E-waves don't have to make the trend line. This one looks like it's undershot, but I mean, the other way you could look at this potentially is like this, where you might have got the expanded B wave and this becomes E, and then this is 1, 2, and we're going up for 3. You can dice it any way you want. I think that the contracting pattern's still the key. So I'm just going to stick with this interpretation, but labeling this is pretty choppy at the moment. I think you could do it a few ways. I think it's still more about the big picture, and that we're trying to go up and get this. That's still what I'm sort of thinking is happening. I don't see anything to make me change my mind on that. It's just a wait and see. But there's just some real basics you can put together. We know that this is a pretty good trend line. In fact, what we can now probably do, just as another little forewarning, is that's a pretty good trend line. We've got some pretty clean touches there, and it's held quite well. And then I could just take the top of this move. Probably take the top of that move. So once again, I mean, that looks like a reasonably, even though we haven't had a lot of action to the top side of this trend channel, now that this is running in what to me looks like an impulse, because obviously, any man and his dog can see that was a really nice downtrend, and I mix that with the uptrend to get the sort of the triangle, the contraction that we've broken out of that the top of this trend channel is probably something to keep an eye on, just as early warning signs if you do something. In terms of this move now, I mean, it's pretty steep, so I don't know if it doesn't really channel super well. But one thing I did pick up, which is also kind of interesting, is you can take this trend channel here, because this was quite nice, but we've broken out of it. But one thing you can do is just, if you clone that, stick this on top for just expanding that channel. Just get it right on there as we start to approach the midpoint of the next channel, if you know what I mean. So that's also potentially something you could look at just for early warning signs, just to see how it's responding to that sort of geometry. Another way you could express it is just like putting this sort of pitchfork, even though I like to usually draw pitchforks out of good retracement areas, and so it's just hovered at 38.2, so it's not super, but it just gives you a bit of geometry. Now, the other thing I'd probably do at this stage, because I think what I'm just pointing out is, how do we put together zones where we might look for reactions to possibly warn us that we're running out of gas. So the other thing I would do is, just going back to this Elliott, I would just look at, and this isn't so much about Elliott, but I would just look at this, right, as the range of the contraction, the high to the low, which obviously was made very early. And then what I'd probably do is just look at range expansion. So I'd just take this, and if I just clone it, and I'll just change the color so we can see it. And if I just stuck that sort of on top of that, so that the range of this, I'd just be thinking about range expansion. Now, you could do it via this whole thing, but I think that's probably asking a bit too much of the stock. I mean, it's not impossible, I suppose. Nothing's impossible, but I think, like, when you sort of clone that up, yeah, I mean, $60. I don't know. I'd leave it to the experts, but I would think, just breezing over the fundamentals, that something would have to change a bit for it to be able to reach 60. I'm not saying it can't, of course, but I wouldn't think so at this stage. But you never know. Anyway, look, I think just on a general basis, just that takes us up to the mid 40. Well, that takes us up to about $45. So even looking at that, you can see, I mean, I've only just realised that, but you look at where that top is, and that's right at the top of that. That kind of fits quite well. I'm not saying that'll happen, but this is just how we put together technical pictures, and we just sort of find sort of areas of confluence. So we know the gap's filled. We know the range expansion takes us right to here, which is about the 78% retracement. And then if we take this, we're a little bit shy of the 100, but you can see how then all of a sudden we'd be putting together a zone, just change the colour, a zone of interest here. And I think I said at the time that $40 to $45 would be the kind of area where you'd be thinking, oh, okay, well, is it decision time? I mean, at the end of the day, you might have got on through all this and you held it through the chop, and then you're on the ride, and that's great. But at the same time, it's like they're burning matches, not family heirlooms. You've still got to have an off ramp, because all your profits are great on paper, but you still, at some stage, you're going to have to get out. So I'll leave it up to you how to decide. All I'm doing is putting together a picture of reasonable areas where I'd expect the possibility of reaction. So as things sit and as this runs, this sort of zone, anywhere once we get above $40, I'd start to be on red alert and just start to fashion some sort of plan about how you're going to exit your trade, if at all. Maybe you're just going to hold it forever. One immediate point of reference that I found pretty interesting, just looking at the the volume's all built up here because of the chop, but you know, the areas that would interest me straight away is here. And you can see there's a little bit of a volume. Now, it's not huge, but there's a little bit in here as well. But resistance, 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 broken, and then it becomes the old, just resistance becomes support. It's a sign of strength, I suppose. But, you know, these old tops down here into the low 30s, you know, I think if you sort of saw the market sort of, you know, come up and then come back, well, you might still be holding your nerve here, but I wouldn't want to see it fail back through there. To me, that would be a warning sign that maybe it's done its dash. But I think we're still a fair way from that. But, you know, this is just all the whole thing about planning. You just look for little points of interest where you think, okay, if it gets back there, then have I got a decision to make? So in the short term, that just technically would certainly, maybe you could just take that out a little bit further, but technically, especially this little spike down here, that it got rejected quite well, but you can see this area held pretty well as resistance until it's broken, and now is it going to become support? I mean, another way to look at it is if it came down here and then did that and made a higher high, well then that would definitely be a great sign, I would have thought, but like I said, we're still a long way from that. Just finally, I'll just finish up here with a little bit of cycle work. I think, you know, we've got the ICL down here, the intermediate cycle low. We've got cycle 1, cycle 2, cycle 3, cycle 4, and they've more or less adhered reasonably well to the medium cycle lengths. So this is a little bit longer. This was quite long. This was long. This is about average. Right now, we're into day 30. We're looking about 60 days roughly. Okay, so it doesn't have to stick to that exactly, but right now we're into day we've got a high on day 30. So just roughly working off this as the last cycle low here on the 2nd of August, that would put us into this range. We're just starting to come into the range where potentially you might see a reaction. And when I say a reaction, you know, it might only be this and we bounce straight back. That can still make a cycle low. If it comes into that sort of range as a general guideline, yeah, you know, like that's kind of where we'd start to map out. The only thing that makes me a little bit nervy is that the next cycle will be daily cycle 5, and usually what we've seen is that they don't, even though we've had some short cycles here, we've had a lot of 3s. We had a 5 here, but we had 3, a 2, a 3. So we are due for maybe a long one to balance it out, but I just don't know if we're going to get cycle 6 and daily cycle 6 and daily cycle 7 before we start to fail. It'll come down to a weekly, but all I'd say is, without going into too much detail on this, is just sort of mid-September, as we're just creeping into mid-October, becomes the sort of time where we might just correct, and then we just got to wait and see if we ricochet further on, or if we start failing. Okay, so when I'd say failing, I'd expect something more like if we came down. If this is going to work, I don't know if it's going to work. If we came down, no, it's not going to work. It does work. I just don't know how to use it. What I'd say is if we came. Gee whiz, let me try again. More if we came down. One more time for the dummies. More if we came. If we came down and then sort of failed to make a new high like that would be how you'd sort of think that the cycle might pan out. That we'd come down to finish the cycle and then we'd start to fail, which would mean that this would be an intermediate cycle high. But like I said, once again, I think we're a fair way away from that. And 16th of October, like that's still a bit of water to go on the bridge, and there's nothing that says that the market can't, you know, go up and visit those areas that we were talking about before it decides what it wants to do next. All right, so look, I'll leave it there. There's just a couple of things I sort of pointed out. I don't know if I'm going to be doing any more of these, to be honest. It's in your hands, you know. If it gets enough traction, maybe I'll have another look, but otherwise that's just how I would put it together at this stage. So good luck, and hope it goes well for you. Cheers.